This is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of the DeFi Decoded podcast. I am Alex Tapscott here with Andrew Young. Last week, Andrew, you gave us some of your big predictions for 2023. If anybody's interested in checking that out, please go to YouTube or wherever you get your podcasts. Listen to that episode. It was a terrific synopsis. Andrew's got some really good ideas on what 2023 is going to look like. And of course, make sure to review, share, subscribe that podcast as well. We appreciate all the support and feedback. Today, we're going to talk a little bit about what's in the news, but then we're going to dive into some of my predictions, which are different from Andrew's, though I think anybody who listened to the last episode will recall that we did agree, unsurprisingly, on a few different items. But before we get into that, Andrew, last week we talked about some of the concerns that people in the industry had about Solana. Solana is this crypto asset ecosystem that at one point was worth $70 billion and had fallen on hard times. One of its biggest backers was SBF, Sam Bankman-Fried. And there were questions about whether it could sustain itself based on sort of its organic community. And while it's too early to tell, it seems that your initial prediction, which is that this could actually maybe be a good thing for Solana, cut some fat, clear out some of the fast money people, and build a better culture, may be proven correct. The assets doubled, I think, in the last week or last 2 weeks since we last talked about it. And also there seems to be a renewed interest, or at least the waters have calmed down a bit. What's your take on what's going on in Solana right now?
Yeah, it was pretty quick recovery. I think a lot of what happened over the last week in terms of the price was short covering combined with the sort of moderately good news of the meme coin called Bonk. So sort of two things. So one is there's been so much negativity around Solana over the last 2 months since the sort of FTX debacle. And so short interest. So the amount of people that have been shorting Sol has been climbing pretty considerably. And so that is almost like a powder keg waiting to blow up, in the sense that all of those people who are short, if the price goes up, they have to buy back to cover their short. Mm-hmm. And so create the situation where any good news would lead to a explosion in the price. And over the last week, activity on Solana picked up pretty considerably because someone launched the first, I don't even know how to explain it, maybe like the first Dogecoin for Solana is maybe a way to describe it. It's this meme coin called Bonk. And it sort of exploded out of nowhere. It went up 300x in one day. It's since fallen, I think, like 80% from its peak. But the sort of implication of this, though, was that it reminded people that Sol wasn't dead. So a lot of people bought Solana because of it. All the people who are short now are suddenly caught in the wrong-footed, and so then they bought back. And so it led to this crazy sort of short squeeze almost.
Yeah.
And I think, like, kind of sort of what we were saying earlier, I don't personally think Sol's dead in any way. I think it's just going through sort of a cleansing, particularly within NFTs. It seems to have a pretty dedicated community. Obviously within the trading sphere, it's got a huge sort of community of projects that leverage the ultra fast speed and scalability. So I think it was just we did a good job of fading the bearish hype around Sol, and I think that's kind of what happened a little bit faster than we thought, but sort of happened over the last week.
Yeah, I'm not sure that Bonk can carry Solana forever, but I think your point is an interesting one, which is that it rallied the community around a sort of a shared cultural thing, and I think brought some eyeballs back to it. So for whatever that's worth, it was I think an important thing for the community. All right. So,
exactly.
Yeah.
No, so that was pretty much it. I mean, that was obviously one of my maybe not predictions, but it's something we've talked a lot about. I'm obviously I did my predictions last episode. So this week we're looking forward to your predictions. What are your big predictions for 2023?
Well, thanks, Andrew, for the lead in. So one of the big ones, and I've talked about this a little bit on the podcast and in some articles that I've written for Fortune in our daily newsletter, is the adoption of Web3 or Web3 tools by enterprises, maybe what's called like Web 2.5, I guess. There's been a lot of discussion around, big businesses and their opinions of web blockchain and Web3 and crypto assets. And typically it falls into these two different camps. One, are big companies buying crypto assets as some kind of investment vehicle, as a cash alternative or store of value? And then two is what are big businesses doing with their own sort of proprietary systems? I'm not here to talk about either of those things. I think it is interesting that big companies, may ultimately become acquirers of crypto assets, especially with big changes to the accounting rules around the treatment of crypto assets. But that's not, to me, the big thing that's interesting. And certainly the rise and fall of enterprise blockchain is not interesting either. What I'm interested in is big companies that are adopting Web3 tools, the concept of digital ownership, and applying it to their business. And I think a lot of people, when they talk about enterprises, they think of big banks or stodgy industrial companies and projects around food tracking or supply chain management or clearing and settling of contracts and so forth. But actually, enterprises, operate in every single industry. They are all industries, right? And so we've seen movie studios, CPG companies, big luxury brands, technology firms, game developers, all embracing these tools in various ways. So whether it's Nike selling $185 million of NFTs, it's a brand that traffics in collectibles, so it's a natural fit, or LVMH applying this through a whole bunch of their different brands like Tiffany's, whether it's PepsiCo with its operations at Taco Bell with NFTs, Starbucks with its loyalty rewards program, even MasterCard, Visa, and these other payments giants, and the deeper integration that they're doing with stable coins. All of this is an adoption by big companies of Web3 tools. Now, I'm referring to things that have already happened. So the question is, what is it going to look like in 2023? A lot of people would probably assume that the decline in the market and the general bearishness around the asset class would mean that big companies should take a pause and not pursue any of the things they're working on. I think the opposite is probably true, and there's a few reasons for that. The first is that the merge, which is something that really got drowned out with the FTX debacle, is a huge milestone for enterprise adoption of Web3. And the reason for that is that the merge reduced Ethereum's carbon footprint to where minting an NFT uses about as much energy as sort of any other kind of computation. And that's something that's a big concern because a lot of big companies are consumer facing, and consumers care about the carbon footprint of the brands that they purchase. That's just the reality. So now that problem, this notion that NFTs were boiling the ocean, which was always problematic and never really credible, is now completely gone. And I really think that's a huge deal. The second big thing is that I think NFTs in general have really lowered the barrier for big businesses to embrace blockchain and Web3. So a lot of potential Web3 applications promise to transform, the deep structure of the firm and the nature of many industries, but that's going to take a long time. And so I think for a lot of big business leaders, the question is like, how do I begin? Where do I start? And NFTs have really lowered the barrier. They're sort of like a gateway drug to adoption of Web3. Once you get used to digital assets, if those are helpful in driving, new customers or opening up new markets, then you may want to embrace other parts of that as well. And I think that's really interesting too. The third thing is that I think actually the decline in the asset prices is going to do very little to dislodge interest and could actually help to accelerate it. Any big company that's experimenting in the space began a long time ago, and any sort of month-to-month, day-to-day gyrations in the price, I don't think are going to stop them from continuing that. And also, it's easier to experiment outside of the glare of sunlight from a bull market where everything's sort of spotlight is on you. And I think that kind of room to innovate is going to be really helpful for a lot of the projects that are happening inside of big companies. The head of cybersecurity at MasterCard, after announcing a big deal with CipherTrace, basically said, look, like we look at it this way, in 3 or 4 years' time, this market is going to be much, much bigger than it is today. This asset class is going to be bigger, more important. And so we're preparing for that future. So the implication is we're not talking about what's happening now or 2 months from now. We're talking about, 4 or 5 years down the road. And a lot of smart business leaders think like that. So one of the big funny things that could come out of this is further integration of Web3 tooling, whether it's, NFTs or stable coins or what have you, into big companies. So that's number one. And we're already starting to see some news coming out of big companies to that effect now. It's very exciting stuff.
So what do you think? I like that. I like that theme. It's pretty contrarian to say the enterprises are coming back in a way. Yeah. Just because obviously historically enterprises have been very risk averse. Crypto has just gone through a really horrible period of PR. The space is kind of dead. There's less kind of we'll say pressure to create a crypto strategy internally if you're at one of these big companies. I'm curious, I guess a two-parter question. Which types of enterprises, so like what industries specifically, do you think are going to be the first ones to adopt crypto or in NFTs and things like that? And then second is, what chains do you think specifically will be the main beneficiaries? You sort of hinted towards it, obviously with Ethereum, but I'm curious on those two.
Yeah, well, I think that the proof is already in the pudding. So look at the kinds of companies that have already embraced it. So if I'd say that most Asian game studios, for example, have developed some kind of like a Web3 strategy. A lot of American game studios have also talked about it, but have received a little bit of blowback from their customer base. But anybody who's in interactive entertainment is seeing what's happening with digital property rights and Web3 gaming, has to be paying attention to this. I mean, the reality is that people today spend $100 billion a year on virtual goods. They love to buy them, but they apparently don't want to own them. We're talking about, the virtual assets inside of games or content or other kinds of virtual goods that only exist in the environments on the platforms that you purchase them. Roblox is a really good example where of their $2+ billion of revenue, most of it comes from the sale of their native currency called Robux. But it's not a digital asset like a crypto asset. It's a thing that exists only inside of a game environment. So I think that if you're a game studio, you're looking at this and seeing the potential to maybe drive new kinds of customers and new types of gaming experiences through digital property rights. And so I think that we should count game studios as enterprises. They are enterprises. It doesn't have to be what Coca-Cola or FedEx is doing. It can be companies that are innovative in the technology space that are doing something. And so I think that's a really good example. Oh, by the way, Coca-Cola and FedEx are also doing stuff in the space, but I'm just talking about the game studios for now. I think that if you look at film and TV, they're obviously really interested in, adapting NFT properties for films and movies. And have gone the other way and have started to look at NFTs as a way to monetize their IP, which is kind of interesting. So like Warner Brothers, for example, launched an NFT project about a month and a half ago. And I would expect other or other film studios also to follow suit. Any consumer packaged goods company that, is looking at loyalty schemes, any kind of rewards program. Digital goods are a really cool way to experiment there. So we're seeing that with Pepsi. We saw that with Starbucks. I, again, would expect a lot of other companies like that to follow suit. And then financial services companies are enterprises as well. We've already seen, PayPal, Square, Block, PayPal, Block, MasterCard, and Visa, all to varying degrees, open the possibility of working in this space or make big investments in the case of Block. And I think that you're going to see a lot more in that direction as well. Maybe not with legacy financial firms, but, even like BNY Mellon, which 2 years ago announced that it was planning a crypto custody solution. That's something that's probably going to launch this year on a wide scale for institutions and other investors. And that's, it's custodying digital assets on behalf of fund companies isn't exactly cutting edge Web3, but it is an example of big enterprises embracing, digital goods, digital assets, and I think that's super important too. So a lot of different industries, I guess, is the answer to your question.
What do you think? So that makes sense. So what's your next prediction?
So next prediction is there's going to be something done in the United States on the policy and regulation side. And I think that that's something that's coming to a head as a result of the FTX debacle. I think the consensus is that it's probably going to be bad, that there are people who are using this as an opportunity to push other agendas that will result in, less financial freedom, less economic freedom, less choice, less freedom to develop, open source Web3 projects and so forth. I'm not so sure. There's a very big blockchain caucus in Congress in the United States. There are well-organized, well-run, well-funded think tanks and policy groups that are making real headway in the country. And today, at least, I think there's an opportunity, perhaps, for some kind of bipartisan consensus on a new telecommunications act for the Web3 era. So anybody who's old enough to remember has read about this. In the 90s, Congress updated and passed a new law around telecommunications called the Telecommunications Act of 1996, which basically laid the rules of the road for how the internet was going to work. Among other things, they said that IP service providers were not responsible for copyright infringement, which prevented, these different companies from getting sued just because someone was using the internet to send a, copy paste photo of Mickey Mouse from one person to another. And that sort of basic idea created some problems for creators, which Web3 might solve, but generally speaking, led to an explosion of internet usage. And I think that we need to come to terms with the reality of Web3 and create some kind of realistic solution. The central issue is always around what are these assets and how do we classify them? And I think that for some people, they view all digital goods as securities, and other people view no digital goods as securities. And the reality is somewhere in the middle. And figuring out what that looks like, it's going to be really hard. I don't know the answer to it, but we need to be able to create clarity for innovators to do what they want in this space. And why do we want this? Because this is a new general purpose technology on par with the web, the first era of the web. It could create tons of economic value, new jobs, new industries, new organizations, new tax revenue. It could help further the West's leadership in financial services and technology innovation and so forth. And those are all the things, those are things that people should give a crap about. And so I think that we're going to see something happen. Now, it could be bad, I don't know, but I think 2023 is going to be the year where we see a law passed in the US that's fairly comprehensive in nature to deal with this industry.
It's funny. I'm actually going to fade that prediction for sort of two reasons. First is I think crypto is obviously there's a lot of eyes on it right now. I think if you fast forward 3 months from now, there's going to be almost no eyes on it. Politicians at the end of the day are sort of price takers in terms of the issues that they want to address. And I think
exactly.
So I think for the most part, politicians want to address issues that are top of mind. So whatever is top of mind is something that their constituents are calling them about every single day. Those are the types of things that there's a lot of political pressure to do something about. So right now there's a lot of pressure on them to do something about crypto, obviously, given the sort of the FTX situation and all this other stuff that's been going on. But I think things are going to settle down in crypto. And so that pressure is going to sort of fade away over the next, it might still be there in Q1, but I don't think it'll be there for the rest of the year. And then the second big reason is Congress is so divided right now. I mean, Kevin McCarthy, who's the Speaker of the House, it took him 15 votes to become the Speaker of the House. They only have a 4-seat or 5-seat majority. And it's an incredibly tenuous coalition, we'll call it that. So, and then within there, I think there's a lot of Republicans. Patrick McHenry comes to mind, who I think is a leading, at one point he was even sort of spoken of as a potential replacement to Kevin McCarthy. He's a huge crypto bull. So I think there's a lot of support for crypto and a very divided Congress, which to me makes me think nothing will happen, at least in terms of new legislation. Maybe I know like there's things that the Treasury can do sort of unilaterally. I'm sure there'll be a lot of stuff there. I'm sort of more bearish on a big crypto law getting passed, if not really anything getting through Congress right now.
Yeah. Well, I want to, clarify what I was saying, which is that the big law could also be Elizabeth Warren's bill that somehow gains popular support. Probably not. There's no path for it through the House, given, the fact that the Republicans have a majority, albeit a slim one. But, some sort of thing that would be punitive to the industry is just as likely as something, maybe not just as likely, but as a distinct possibility to some sort of like grand bargain. Maybe I'm looking at this through rose-colored glasses, or not considering the political realities as acutely as I should be. But I think that at a certain point something comes to a head, and people say, something must be done about this, whatever this is. In terms of the political reality, one of the bright spots, I guess, about this is that there are plenty of people who are negative about crypto in Congress, and most of them are probably Democrats, but those who are positive are pretty mixed. It's maybe Republican leaning, but there are people on both sides, that are open-minded about this. And so the hope is that somehow an issue of what I view as an issue of national importance, which is the future of the web and the future of American leadership in technology and finance, should be something that people should get together and figure out. But again, maybe I'm being naive, but that's my point of view.
Yeah, no, I think you're right in the first part, in the sense that there is going to be a big push to get something out, particularly in Q1 when the issue is still fresh. I just don't think anything's going to get through, and I think by the end of Q1, crypto will be mostly relegated to the dustbin. But anyways, that's just my point. What else you got for us? You got to have at least one more prediction for 2020.
Yeah, a couple more. One is that the last cycle that we had, a lot of people think of the DeFi summer and the speculation on centralized exchanges like FTX as being some of the big drivers of adoption. But actually the last cycle, NFTs were, I think, probably the big surprise to a lot of people. NFT volumes kind of started 2021 out of nowhere and grew by orders of magnitude. Now they've come down a lot, but I don't know if anybody who spends time on crypto Twitter or follows these projects sees that these communities are alive and well, and people are still really interested in NFTs. And so I think what the next logical step is for NFTs is to create experiences, more rich experiences and communities around NFTs. And I think within that context, one of the next big drivers of user growth is going to be gaming. Now, this is something that we've talked about. I think we even talked about it at the beginning of last year, and it actually was a big driver, like outside of the context of the market declining so much, of new user adoption into crypto. But I think the rubber's really going to hit the road. There's a couple of reasons for that. Number one, NFT gaming is a very new phenomenon. Games are one of those things that take some time to develop, especially if they're rich immersive experiences like console games. And so any project that got funded 2 or 3 years ago is probably still in development, and we're going to see some of those titles get released this year. Why is that important? A lot of the early Web3 games were very much focused on token economics, who's basically play the game to earn as much as you can, and then once those rewards dried up, you move on to the next thing. It's basically like yield farming, but for gaming. And that sort of financial mindset makes more sense in DeFi because the purpose of finance is to extract value, it's to make money. But when it comes to gaming and film and sort of these other experiences, these are they're cultural experiences as much as financial experiences. And so if you can build a cultural experience that causes people to stick around, then you're going to actually be way more sticky than, a lending pool or decentralized exchange, because people are there not just to make money. They're there to be part of a community, to play something that's fun, to, engage in, quests and ventures and whatever the gameplay might entail. And I think that this year is going to be the year where we see ownership and token economics being a component of gameplay, not the whole point of the gameplay. And people will come for the gameplay and stick around for the token rewards, or vice versa, but it'll be one of sort of many parts of that whole experience. And I think that that's something that's going to play out quite a lot. If you look at the block last year came out with its end of year research report, and it broke down the funding within the VC space for different segments in Web3. And I was really surprised, to see that the VC funding kind of held up okay, 2021 over 22. And maybe that's because rounds were already closed and people, were sitting on dry powder. But that within that industry, within the VC industry, a huge chunk, I think it was like $6 billion went to interactive gaming, NFT gaming, Web3 gaming, out of like 20 billion. So it was the leading category for VC funding. And if you look at some of these Yuga games, which Yuga Labs, which owns Bored Ape and some of these other big NFT properties, it raised $1 billion for its gaming play and just hired the former COO of Activision Blizzard, which is the biggest independent game studio in the world, to run it as it launches its new game. We're just seeing so much happening, and it just feels like big leagues, in the gaming and entertainment space compared to other areas of crypto. I think right now there are other things there's one more thing I want to talk about that's not NFT related, but it just seems to me like if you can create experiences and applications that people find pleasurable and fun to use and engage with community, and then you can integrate all of this Web3 functionality into it. That's the thing that's going to get you from where we are to 10 times more users down the road.
Yeah, I think we both share the same sort of thesis on that, and I totally agree with that wholeheartedly. I think the next wave of games are just going to be so much better. We've talked about this in the past, but they're going to be fun on their own, and the token will just be an added bonus.
Yeah.
Versus the token being the whole thing.
Yeah.
Is that it, or you got one more fun prediction for us?
I got one more on the DeFi side of things. So one of the main criticisms of DeFi has been that it's kind of a closed loop system. Basically, it's people trading crypto assets on Uniswap, then using them as collateral on a lending pool like Compound, then getting that collateral and speculating somewhere else. And it's just like a big circle of tokens going around. And if the token values decline, then the whole economic activity of DeFi declines. And there's a lot of truth to that. Like, let's be clear. And part of that is because there are very few bridges and connectors from the world of traditional finance into the world of DeFi. Ultimately, most lending in DeFi, or all lending in DeFi pretty much, is collateralized, right? Or over collateralized typically. You typically have to lock up $2 to borrow $1. That's not unusual in traditional finance. If you think about your home, if you borrow, in Canada, we have these things called home equity lines of credit. If you have a house that's worth $1 million, you might be able to borrow 400 grand. Or if you have a stock portfolio worth $1 million, you might be able to get, a loan on margin for 400 grand. So there's plenty of examples of collateralized lending where that money then goes on to be used in every part of the economy. So that's true in I think in DeFi as well, though probably to a limited degree. I think most of it's speculation. But we need to do a couple of things to sort of break free from this cycle. One is having real assets be more integrated into DeFi. And one way for that is, looking at like MakerDAO, for example. The collateral for DAI now includes a couple $1 billion of US treasuries. And if you look at, some projects like Parcel and others, they're trying to create marketplaces to invest into, real estate and other real assets. And I think we need to see more of that. I think the limitation there is not technological. The limitation is legal and regulatory. I think that, that we're talking about two systems that are honestly, right now, mostly incompatible. You have the world of real assets, which is based on the rule of law, and property rights, written into statutes. And then you've got this other thing that's the rule of code, where it's about, being a bearer of assets and, proving ownership on chain. And those are very different concepts. And so figuring out ways to integrate them is going to take time. But I think that's going to be a big theme. And then the other part of that is around identity and reputation. So one of the reasons, maybe the big reason that lending in DeFi is over collateralized is because it's anonymous. So you're not going to loan money against someone if you don't know who they are. at least taking possession of their collateral. Now, it's not like this is not a person or a bank lending money, right? It's all inside of a smart contract and it executes automatically. But if you want to extend credit to people who can't, who don't have assets, which is, by the way, how a lot of traditional credit works, credit cards, unsecured bank loans and so forth, then you need to have something else that you can rely upon. And instead of relying on assets, you need to be able to rely on identity and reputation. So if you think of a credit score, there are these companies like FICO, for example, Equifax, that have a way to score someone's credit. And what does that mean exactly? The credit score simply measures not only your ability to pay, which is how much money or income you might have, but your willingness to pay, which is what is your track record? What kind of a borrower are you? What kind of a person are you? Are you the kind of person that always pays their phone bill on time? Are you someone who always pays their property tax on time? Are you somebody who, has had steady employment and can be relied upon to hold a job? Like, these are the kinds of things that go into the scoring for that. And those kinds of factors today are not included in lending in DeFi, right? So in a way, DeFi lending is actually extremely inefficient. It's efficient in some respects and extremely inefficient in others. And the way in which it's inefficient is that it doesn't matter if it's me or, Jeff Bezos or some kid out of school who works at McDonald's. We're all borrowing at the same rate, right? Even though all three of us have a completely different ability to repay a loan in a way. So, and part of that's just because it's collateralized, but to price credit, you need to know more about the quality of your borrower. And I think that reputation scoring is one way to potentially do that. So what am I talking about? Well, what I'm talking about is the idea of like a DeFi or a Web3 credit score of some kind. There's some companies that are working on this. Spectral Finance is one that closed a $35 million financing round from Social Capital, I think in August of last year. They're actually building, their thing literally is a score based on the FICO score. So it's actually the same numeric range. I think that's a skeuomorphic design choice to help people who know about credit scores connect into this world. But there are some major challenges to implementing this. One is that, are we talking about an individual person or are we talking about wallets? Because you could say like, oh, here's a wallet and here it has this amount of assets and, here's its track record in a whole bunch of different scenarios, whatever. But that doesn't mean that someone couldn't maintain, a good credit wallet to try and access lending and then have the rest of its activity off book, right? So to speak. So each individual wallet only provides a tiny snapshot of a potential of a Web3 user holistically, right? Because they could have multiple wallets across multiple chains, different kinds of economic activity. So trying to figure out a way to broach that is going to be a challenge. I think probably for people in Web3, this might seem like, counter or antithetical, but, if you could create a Web3 credit score that included a combination of, economic activity in each wallet, plus your existing FICO score, plus maybe KYC from a centralized exchange and integrate that into a digital identity, then that's something that you could use in DeFi to get access to credit, maybe on margin, right? Or to get access to credit without having to pony up collateral. And once we do that, then we're able to export more economic value outside of the system. So the money that's being borrowed is additive. It's value add. So it can be used to go buy a car, pay for education, or go on a vacation, or do whatever you want. But that's how money gets spent in the real economy, right? So I think that identity and reputation is really the linchpin that's going to help to open DeFi to the rest of the world.
Yeah. I mean, I'm not sure if it's going to happen over the next year, but that would be huge in terms of impact.
Yeah, I might be overly ambitious. I'm just looking at, there were a couple projects that were funded last year. And a lot of these things take forever to scale, like we know that. So, just because they were funded last year doesn't mean the rubber is going to hit the road this year, but I'm cautiously optimistic that we're going to start seeing more of this. And like, so there's a push on the technology, but what is the demand pull for this? Well, there's a couple things. So, is this a problem? Is this like a solution in search of a problem? Like, do people want this, or is DeFi better off just being what it is? Well, I think that there's some demand pull. So the demand pull is, if you're a let's say you're a centralized exchange, right? Like a Binance, for example. Wouldn't and you've KYC'd a user, and you're extending credit to a user, right? To buy assets on margin, to use leverage. Wouldn't you like to have a little more information about the user? Like, what if they were able to provide, in addition to the KYC part, a DeFi credit score? It's like, oh, that's value add, that's additive information. What I know about you in DeFi, it helps me as a CeFi player to judge your creditworthiness and to how to treat you as a customer. So that's kind of useful. I would say also that traditional companies, whether they're banks or other firms, might want to know if a 23-year-old who supposedly has good credit, limited as it might be because they're still young, is actually a DeFi degen that's doing all sorts of crazy stuff online. And maybe they'll start to ask you for that as well. So that's not necessarily like a feel-good story for people in crypto, but you can see all of a sudden the data itself being super valuable to a lot of different players. And so maybe there's a demand pull that helps to accelerate this rather than just like a bunch of entrepreneurs tinkering away on a concept. But we'll see.
I love it. Well, that's our prediction show for the last 2 weeks. We got them all in. We'll have to we'll do a friendly wager, see who's more right. Maybe get a third party to judge.
I'm not sure how we're going to quantify this. Yeah, but we'll have to figure it out. Well, your last episode, you talked about a flight to quality. And you talked about protocol revenue and how the metric that you really think is interesting is the idea that a project's protocol revenue should exceed its inflation rate, basically. And I'm going to write this up for the weekly note for 9 Point because I like it because it's very clever, and I think you're probably right. But also, it's like crypto has reinvented earnings per share. It's like, wait a minute. So if you make more money than you spend, and you grow the revenue per token, then the tokens should go up. And it's
crazy thing.
I've heard this before, I think, in my CFA level 1 course. But anyway, but I think it's very interesting. Like all things crypto, it's like it's borrowing, but it's also innovating at the same time. And that's what makes this space so interesting. But I also wanted to just say that I think that prediction is very, very correct and also very self-serving in a way, because there's a certain project called the SX network, which has since its inception generated revenue, protocol revenue that is greater, or I would say outsized for like the size of the project, right? And that revenue has always been a kind of linchpin or cornerstone of what you're trying to do too. So SX network would be something that people should learn about if they want to see if your prediction plays out. That could be one way of measuring it.
Yeah. And SX lets you also make those predictions too. So even better. Make a prediction about SX on SX.
We can make a market on the
we will.
All right. Okay, cool. Right on. Well, great episode. Andrew, thanks everyone for listening, joining. As we say every episode, or we at least should, make sure to like, subscribe, share, post, comment, critique, whatever you want. But engage with us. Really love the feedback. That's it for this episode. We'll see you all next week. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.